everyday question and curiosity of what will happen to my salary. Every day I hear question like, Jamiu, will my salary increase? Will my salary reduce? This Reform Act that Tinubu is introducing, what really is the problem? What exactly are we going to do? How am I going to renegotiate with my employer and all of that? And also, we have the impact from the employer on how to navigate through this, how it will not result into additional staff cost, and how the economy will not go into resulting into additional costs to them. Welcome once again. My name is Jami Shule. I'll be the moderator for today's webinar. It promises to be exciting one, interactive and educative one. Thank you very much once again for joining us, and we should be looking forward to a good session. Thank you. Without any further ado, we're starting with the opening remark. We're handing over to the bank chief financial officer in person of Avini Awotunde, a leader, a strategic partner, and keynote when it comes to discussions such as this. Over to you, sir. Thank you very much. Please, can you confirm you can hear me by sending an emoji or something? Thank you. Over to you, sir.
Okay, thank you, Jamiu. Thank you. Good morning, everyone. I believe I'm audible. Can you hear me, please? Okay. Thank you so much, Jamiu, for kicking the conversation open. My name is Arini Awotunde. I'm the Chief Finance Officer of Coronation Merchant Bank. I am happy to have you here. Today, we shall be talking about the Nigerian Tax Reform Act of 2025. In June 2025, we are all aware that the President Bola Ahmed Tinubu, assented to the Tax Act. And what is the objective of this Tax Act? There are 4 aims, and I will have my guest speaker make do justice to this conversation. But let's just set the ball rolling by looking at the aims of the Tax Act. Before now, we have different tax law. There are confusion. You have the state, you have the federal government, you have all of this here, and here. Now, in order to converge the tax into one for simplicity, then there were a conversation around the Tax Act. I know a lot of us were distracted during this conversation. Probably we didn't feel concerned, but we're only focusing on the issue of the VAT, the crisis between the northern governors and the remaining governors in the country, and the act has come to stay. Effective 1st of January 2026, then we will start to live a new norm. Now, there are 4 major aims of this Tax Reform Act. The first one is to simplify the tax system, like I mentioned, to converge. The second one is to broaden the tax base, because people have been complaining, and now there is need for us to broaden and bring more people into the tax net. The third one, of course, leaning from the second one, is to boost the government revenue through the non-oil revenue source. And the last one is to align Nigerian tax with modern best practice globally. So with me today will be 2 erudite scholars, experts in this tax matter, and I'll make formal introduction, right? Coronation Merchant Bank, like you know, we are into the business of merchant banking, wholesale banking. We have different customers spanning from the HNI, UHNI to the corporate and investment customer. Like Jami mentioned, everybody is impacted here, and there is need for us to have that conversation. So welcome with me, Dr. Zion Atura and Dr. Sandra Momo. I call her Dr. Pastor Mama Sandra Moma. So these are the 2 guest speakers that will be helping to do justice to this topic. And I will take a short profile of my guest speakers here so that we can appreciate the people we have brought in today. They are not flight by night. You don't come across them every time. It's always on occasion like this. So I will start with Dr. Zion. Dr. Zion Atura is the tax service partner of AY Ernst & Young Nigeria. Dr. Zion holds a PhD in developmental finance from the Babcock University. He's a seasoned tax expert with over 20 years in tax management. His experience spans from public sector. He's worked in among the big four. It didn't start with EY. So he's got experience across. He's a fellow of the Institute of Chartered Accountants of Nigeria, ICANN. He's an FCA. He's a fellow of the Institute of Taxation of Nigeria. Dr. Atura leads the EY People Advisory Service, PAS. So he's an expert when it comes to payee and personal income tax. We should not think that we are pitying him. Let's fire him with questions. He's loaded. All our concern, Dr. Zion will do justice to it. And when I say this, I mean it with every word. So please, let's be very free. Apart from that, he also plays strategic role in EY government and public sector in Nigeria, helping to shape the tax solution that supports both business and national development. Is somebody trying to say something? He's a recognized thought leader. He delivered key papers and served on expert panel at prestigious forum, including the EY Human Capital Conference in Miami and Lisbon, EY Senior Training Zonal Accountant Conference in Yenagoa, in Port Harcourt, and the CITN Annual Tax Conference in Abuja, among others. Beyond the stage, Dr. Zion contributes to academic discourse. His scholarly work includes tax revenue and employment level in Nigeria. Dr. Zion, I witnessed when you did that presentation. Awesome one. Published in Economic and Finance Letter, a Category A academic journal. He is deeply passionate about delivering exceptional clients, fostering inclusive and high-performing teams, and contributing meaningfully to community development outside of work. Dr. Zion, with his spouse and the 3 children. Please help me to welcome on stage Dr. Atura Zion. Thank you. Thank you, Dr. Zion. We are happy to have you here as our guest speaker. Quickly, I will take the next citation of Dr. Sandra Chinedu Moma. She is an associate partner at EY Nigeria, where she leads financial service sector within the tax unit. With over 20 years of experience, she's a seasoned tax professional. Her expertise span various business fields, including tax planning for mergers and acquisition, is very relevant here, tax structure, tax due diligence, tax health checks, tax advisory, tax compliance, and transfer pricing. Sandra graduated as the best graduating student in her class with a degree in accounting. She holds Doctor of Philosophy PhD in finance, also from Babcock University like Dr. Zion, and an MBA from Obafemi Awolowo University, Ile-Ife. Additionally, she holds an advanced diploma in international tax and advanced diploma in transfer pricing from the Thomas Jefferson School of Law in the United States. She's a fellow of both Institute of Chartered Accountants of Nigeria, ICANN, and the Chartered Institute of Taxation of Nigeria, CITN. She's a member of the Institute of Chartered Accountants of Nigeria, England, and Wales. Sandra regularly facilitates and presents papers on international tax, transfer pricing, tax structuring and planning, and other current tax issues for CITN, ICANN, and the West Africa Union of Tax Institutes, WATSI, among others. Sandra is Deputy Vice Chairman of Ilupeju, Bagada, and District Society of ICANN, and a member of ICANN Technical Research and Public Policy Committee. She formerly chaired the Training and Program Committee for the Audit, Investigation, and Forensic Accounting Faculty of ICANN. Sandra is the Dean of International Tax Faculty of CITN and the 5th Coordinator of the Society of Women in Taxation Lagos Chapter. She is also the President of the Professional Women Network, PWN, in Nigeria, which aims to promote women in leadership and enhance their profile for the benefit of business and society. Additionally, she founded the Insightful Ladies Forum, a platform dedicated to empowering young girls and women to pursue leadership position and opportunity. Ladies and gentlemen, please sit and glued to your screen for the next One Nigerian Tax Reform Act by the Atura and Dr. Sandra Mom. Over to you.
Okay. Thank you very much, Arini, for that.
So, Jamiu.
Okay. Okay. Thank you very much, Arini, for that wonderful brief summary citation about our guest speakers. It is really a big profile, I must say. We are so honored and happy to have you with us today. So we go straight to the business of the day, which is what our audience are here with us on. And the main thing we'll be starting with is to look at, a lot of people have been complaining. We have an existing tax laws, we have regulations and guidelines that we've been operating with. Why is it now that the government are actually introducing this Reform Act? What are these acts? Why are they trying to stress us on this act? Is it that they're trying to get more revenue? And even at that, if it's about planning to get more revenue, do they even have plans on what they want to use the revenue generated for? We've been seeing them collecting taxes from us. We're not really seeing the impact. So what are these Reform Acts? How does it differ from the existing tax laws that we currently have? I would like Dr. Zion to help us do justice to that. Over to you, sir. Thank you very much.
Thank you so much. Thank you, everybody. Thank you, Arini. And I'm also very happy to be here. Anything that can make us understand what the reforms are all about is something I'm always very, very passionate about also. Now, your question is, the Arini was talking earlier, he mentioned some of the key objectives of this tax reform. If you follow the tax system in Nigeria, something that you will always remember and which you will always see, which is always also different from what you have in other jurisdictions, is the fact that we have, if you need to understand the tax process in Nigeria, you need to have a library of tax books. In fact, you need to have a library. If you look at the Company Income Tax Act, the current one is a big book, as big as a Bible. If you see the Personal Income Tax Act, the current one is as big as a Bible. And now you have all the books all over the place. Then maybe from 9 or 10 years ago, we started also introducing finance acts, maybe every 6 months or every 7 months. So the tax, what you need to look at in Nigeria to understand tax, I mean, you need to keep a library, a whole library. So it was not what is obtainable in other parts of the world where people are serious. apart from even having a library of tax books, if you look at the tax laws that we have been looking at, every day I look at the Personal Income Tax Act, the current one, and I discovered that the law was actually passed in 1959. So if care is not taken, there's nobody in this place who was around when that law was passed. So if in 2025, and you are talking about development, and the law you are using to pursue revenue generation is a law of maybe another century, it will never look like you are serious at all. So almost all the tax laws we have, they are old, they are too many. And when you look at some of the provisions in the Tax Act, in my former world, one of my partners then told me that when he read the Company Income Tax Act of Nigeria, he said he discovered that there are some provisions in the act that were in the British corporate tax law as early as 1940 something that have been thrown away. And there are major provisions in Nigeria in the 21st century. So one of the major issues that the tax reform wanted to address is the issue of at least updating our tax laws, bring them to par to what is obtainable today. And rather than have a library of tax books because you want to understand the tax law, the reform also tried to bring all the laws together and put them into something that is you can read. Most of the time when I travel now, I just print all the new laws. I mean, just something that is not as big as a notebook. We just put it in my bag. So it makes it so easy. Anybody can read it and understand. So the reforms tried to make some changes in the law, some of the changes that are too old, that cannot support development. They need to look at those changes, bring them on board, look at what is happening in other jurisdictions, and also make our tax laws to mirror what is happening globally. So this were the reform. So if you look at the reforms that we currently have now, like the earlier speaker has said, you have almost 50 laws now codified into one law, rather than having 50 pieces of legislation all over the place. You put them into one law that everybody can see. Then there were some key changes that you now bring on board. Some changes that in the old laws cannot support economic development. We now remove and you bring in new changes. So if you now look at company income taxation, personal income taxation, I mean, you have a whole lot of things that you can look at and say, oh, okay, yeah, this is good. I mean, there's something I always point out. In our old Personal Income Tax Act, you discover that Nigeria taxed people on residence, but the law did not define what a resident was. What is the resident in the old law? The law simply said that when you live in a state, you are a resident of the state. So what does that mean? You know, but if you now look at the new law, you now have new changes. You now have justice done to so many of such things. So if you are telling somebody outside Nigeria that Nigeria tax individuals on resident, you can clearly explain to the person what residents mean in our law. Not just saying that because the person lives in Lagos, that is what makes him resident. That is not what is done all over the world. Now you now have some other salient issues that come into the new tax law, again, as part of the reform. For example, the issue of minimum effective tax rates. I mean, this is great. In all my tax life, at times I look at some clients, I look at some organizations, and I ask myself, why are they in Nigeria? You have a company that is making losses every year. Every year is loss. Every year is loss. Maybe it's a multinational, big organizations, but only loss every year. But they are here. They are not packing and going. And you ask yourself, why are they making only loss and they are not going? So if you look at the new law, the law has addressed that. I mean, there is a level of tax you must pay. If you like, cry. If you like, say you are making losses. So, I mean, these are what are done in other parts of the world. So many of the things that you see in this reform now, they are things that are be tested in other jurisdictions. Now, but what are the key objectives? Because we can't, the time is not enough to look at the changes that have happened in the law. The main objective that the law wants to achieve is just like what the earlier speaker has said, simplicity. You want to have a law that is simple, a law people can understand. And now I can tell you that the level of discourse and the 2025 tax return, Nigeria had never had such level of discourse before. So it means that that objective is being achieved. People are suddenly looking at the law, what is going on, what is going to happen on 1st of January. I mean, what is going to happen? People are not asking questions. In the past, I mean, nobody was asking questions about taxes. If you're a tax man, you just look like you are not busy. If you look at all the organization, the tax manager is somebody they put in one small corner, maybe just one small cubicle, so that is the tax manager's office. But you see, with the reforms that we are seeing now, it looks like everybody is moving away from that. People are calling the tax manager now. They say, but it's like, you bring your table to this setup, please. Let's be seeing your face because things has changed. Yeah. Then every day you look at Africa, I'm not talking about Europe and America. If you look at tax to GDP ratio in Africa, the average in Africa is about 16%. African average. I'm not talking about OECD. I'm not talking about Europe. 16%. That's the average for Africa. In my countries like Tunisia, their tax to GDP ratio is 34%. Even our small neighbors here, Ghana, 14%. If you look at small countries like Benin Republic, some are 15%, 17%. But what is the Nigeria tax to GDP ratio? Currently, the government is saying it's 10%. No, it's actually not 10%. If you look at all the IMF record, there's nothing like 10% in the IMF record. Nigeria just do some rebasing, and MBS come up with the magic number. I say, yeah, now we have moved to 10%. That's not how they do tax to GDP ratio. Nigeria tax to GDP ratio is actually among the smallest in Africa. I mean, it doesn't make any sense. Even if we are individual, you can't be saying your tax to GDP ratio is among the smallest in Africa. And we think we are the giant of Africa. So if we are big and our economy is big, it should reflect in taxation. It should reflect in how much we bring back as taxation. I mean, so one of the major objectives of this reform is also to ensure that by widening the tax base, focusing so much on clear compliance procedures, our tax to GDP ratio should move from where it is, the abysmal level it is, to a level where people can look at it and know that we are serious. There's so many other things that are the objective. For example, one of the objectives is to ensure that we move away from the regressive tax system that we have, so that you now have people who have more should pay more. Corporations that make more money should pay more money. So you don't have people who make more money, but they are declaring losses every day. And the small business that is not making much money is the one suffering taxation. And the law also tried to throw away some of the small taxes that we have all over the place that are causing nuisance to the tax system, so that we can become focused. Yeah. So thank you so much. And maybe as we go on, we'll look at these issues in more and more details. Thank you so much.
Thank you very much, Dr. Zion. Left to me, I'll say you should continue because you're already in the mood of learning what all this reform is all about. And I believe even the audience will now see the reason why we, as a country, needed to do this reformation in terms of it's not just about trying to generate more revenue from the government's perspective, but rather as a nation, we are not yet there in terms of tax. We need to do better. We need to do reformation. A lot of things that were ongoing as at 1959, just like you said, that we have laws that we are still practicing as at 1959. A lot of things have changed. We needed this reform. Thank you very much for that, sir. And just like we understand, 4 reforms were passed, right? We have the Nigerian Tax Act. We have the Nigerian Tax Administration Act. We have the Nigerian Revenue Service, and the last one, the Joint Revenue Board, which we believe a lot of changes were made to these. And just like you said, in Nigeria, currently we have over 50 taxes. They are trying to consolidate into one single bucket, and it will be easier for all. So this question is for Dr. Sandra to help us understand, just like Dr. Zion laid the foundation in terms of a lot of changes were made. So while we're on this call is looking ahead of 2026, a lot of our customers, individuals of the opinion that how will this thing affect me? Hope is not something that I'll need to run and leave the country behind. What are the major things to actually plan towards 2026? What are at least 2 to 3 things that as a corporate, as an individual, and as a business owner, you are expected to plan ahead for that 2026? Thank you very much. Over to you, Ma.
Yeah. Good morning, everyone. Thank you, Jamiu. Please confirm you can hear me. Hello?
Yes, loud and clear. Please go ahead.
Okay, perfect. Thank you so much. Thank you for that question. Then thank you, Coronation, for organizing this session. It's very, very important. And thank you for having me here. I'm so happy to be here this morning. And then, like Zion alluded to the conversation leading to the objective why we are having the reform. So it's very important. Every one of us as Nigerians and taxpayers, tax consultant, tax practitioner, what is in there for me? What is my role? Is there anything good coming out of this? Definitely, so many. For us, tax consultant is a good thing, right? Like Zion alluded. For me, yeah, I can easily pick up a document and I'm able to advise a company. If a company is coming into Nigeria and said, what is the tax implication? Or somebody call me, I'm trying to do this product. I can easily flip through the one document, NTA, and be able to advise. Prior to this or now, you can't easily do that. So you're searching everywhere. Right. So it's a good thing that we are having this reform, and especially regarding our economy, more like focusing on what do we need now, not only just throwing laws there. Are they meeting the objective? Are we trying to boost the economy, which sector needs that's changes that we are making? So we are seeing that being aligned in terms of the tax reform. So there are many, like Jamiu indicated, there are several amendments across the tax acts that will have significant impact as we start up 2026, implementation date January 1st. So it will be good. I'll just focus on a few of them. One is the residency rule. So for a company, prior to this, you're a Nigerian company if you're incorporated in Nigeria, and that is just all. And the implication is that you're seen as a resident company if you're incorporated in Nigeria. And what happens is that your worldwide income, is subject to tax in Nigeria. So residency, but in terms of NTA expanded the definition of a residency to include not only a company being incorporated in Nigeria, you now have a company that has a central place of management in Nigeria or control in Nigeria, or has its first effective place of management in Nigeria to be deemed a resident company. What is the implication? So for a resident company, like I earlier indicated, your worldwide income, Section 6 of the NTA indicate that your profit, wherever it is coming from, whether you brought into Nigeria or not, is subject to tax in Nigeria because you're a resident company. So the implication is that in terms of trying to plan, part of the planning is to expand, have set up companies, other jurisdiction. So what will happen is that if you have a company and the effective management is here in Nigeria, that let's assume you set up a company in South Africa, right, as a subsidiary, or in Ghana, any country, and then the effective management is from Nigeria. Based on the provision of the tax law right now, that company will be deemed a resident company. And what happens is that every other tax compliance that apply to a Nigerian company, we apply to that company because the company is deemed resident. Number one thing is that the worldwide income will be subject to tax. So it's very important that companies be aware of this. The same thing with also individual, and Zion, I will leave Zion to talk on that. Residency also expanded for individual. So it's very good to look at that so that you start working towards compliance. The law they've given us 6 months. It was signed June 2025. So we had 6 months to prepare. We have few days now. So it will be good to put that into consideration as you're putting things in place, to be aware of this law, because it changes your compliance process. It changes your tax status, your tax position. So you need to look at your business and then expansion plan to take that into consideration. That's the one. Then the second point is how to do with introduction of minimum effective tax rate. Yeah, maybe I can give a background to this. This is actually coming, fine, it's being introduced by Nigeria, but it's not actually driven by Nigeria. It's driven globally. You know, one of the objectives is to align our tax law to global trend, align with the global best practices. And there have been a lot of changes globally, especially driven from OECD and then BEPS, base erosion and profit shifting. They've put in place action plan through which countries should implement to mitigate against profit shifting. And what is profit shifting is more taking advantage strategies that multinational put in place to shift profit from one tax jurisdiction where activities are performed to places where no activities are being performed. And why is that possible? I want to just give this background. It's going to help us because a lot of questions might come and why is that possible? For example, we have different tax rates, corporate tax rates. Currently, Nigeria is 30. Other countries, we have 25, we have 19, we have 20, you know, different tax rates. And there's some tax havens as low as 15, Mauritius and all that. So what does that mean? If I have different tax rates, I can easily structure my transaction in a way that I have more profit in countries where they have lower tax rates. And that is what multinationals have been doing in terms of structuring, you know, taking advantage of the provisions of the tax law in order to shift profit. And then the OECD started working, what can we do? If we have a uniform tax rate globally, it will cure this problem. So currently this was introduced, minimum tax 50% across various countries, especially countries that are part of BEPS inclusive framework. Over 140 countries are members. Nigeria is a member of that. And now it's now in our tax law put in there. So it provides that the minimum effective tax rate of every company, especially a company that falls within the threshold, it provides the threshold, i.e. for companies with aggregate turnover of within the group, 750 million group turnover, or any company with a turnover 50 billion naira and above. So if you are a company within this, the law is saying every financial year, the minimum tax you're going to pay where you're operating business. Now we're talking Nigeria, but most other jurisdictions it applies. Some companies that have signed off, they put it in their law. The minimum tax you need to pay is 15%. So if at the end of the year you calculate your tax and the tax payable, let's take for example, you have your tax payable 12%, the law says you should assess yourself and pay the additional 3%. So that's another thing. So companies that are planning, they need to be aware of this, that this will take effect from January 1st. So you need to start looking at your transactions in that respect, and then tax planning that you have. How does that help? So it put a minimum threshold in terms of how far you can plan. So whatever planning that you're putting in place, your tax rate should not go less than 15% for companies that fall within this. So, but if you're a small company not within this, you're good. The exemption, this will not apply. And then another point in terms of tax plan. Let me just round off this. So it's more like this is the first time we are having a session 30 of NTAA, that is Nigerian Tax Administration, provides that if a company has a person who enters or intends to enter into any transaction, you know, agreement that will make you have tax advantage or tax benefit, more like you're having tax planning, you're expected without notice to provide that information to the tax authority. And the further session provide that the tax authority can issue regulation in that respect on what they will require from you. So it's more like nothing is hiding. So if you're thinking of tax planning, you know to think of this and how they are going to view this. I think I'll stop here as we take the conversation forward so that we'll have more things to talk about. Thank you.
Okay, thank you very much, Doctor. Thank you. I think you've done justice to it, even though, like you rightly said, the time is not enough to quickly address all of these things. So due to time, like I said, we quickly look into individual, right? Since we have customers that are HNIs, the impact on even those that are under employment income. So this for Dr. Zion, since just like Winnie said, the payee leader when it comes to personal income tax, right? So looking at an individual, just like Dr. Sandra mentioned, the impact of residency being redefined to now mean a new thing in the act. And we have those that are working in Nigeria, earning income from foreign companies, like that are not resident in Nigeria. So how is the act talking of how the tax would be, the HNIs, to what are the impacts of this reform acts on them, and as those that are under employment income, as a staff, what will be the impact? Because we understand the remove some relief or considered relief allowance that's no longer in existence, introducing rent relief. There are some that have lease engagement arrangements that are not really paying annual rent. So how will that impact all these individuals? So just focus on individual now, HNIs, those under employment income, and those that are working remotely for a foreign company. Thank you very much, sir.
Yeah, so thank you so much. This is a great question, because if you look at the countries where you have tax to GDP ratio being at a very high rate, the tax actually come more from individuals, not from corporates. So that is something we've not, up to this point, not gotten right in Nigeria. So like Sandra has said earlier, you see that you have other countries on earth, you see that our CIT rate is actually among the highest on earth. You hardly see a country where the CIT is 30%. It's actually lower. But the individuals are the one that drives tax payments. So if you look at South Africa, almost all the income South Africa get from taxation actually come from individuals. Now, so where in Nigeria, I look at the law again and look at the law again. What I expected to see is not there yet. We just have made just a step. Because when we look at individual, it seems the law is mirroring more people in employment. It's actually not mirroring HNI, unless we are missing, by our regulators' interpretation, we are missing HNI with people who earn maybe some big salaries in employment. We're just missing that. That is why we think that this law is actually targeting high income earners. No, it's actually targeting more high salary earners, which is okay as a beginning. But considering where we are coming from, I would have loved more drastic changes in this area of taxation. Because look around you. If you look at the people that drive all manner of cars in Lagos, the ones that drive Range Rovers, Cybertruck, they are not employees. They're actually high net worth individuals. Go and check their tax clearance certificates. The only time they pay tax is maybe Lagos say, well, you need to register this your house. Then they take a boat or Uber to LRS and declare some ridiculous income and pay taxes. So you can see that there's a whole lot of leakages through high net worth individuals who are actually not paying the taxes they should pay. But in terms of employees, there are major changes to this law. Sandra has mentioned it earlier. Resident had been properly defined. And this is big. A lot of people are not aware that this is big. Because of the experience I've had with a whole lot of persons coming from abroad, foreigners coming to work in Nigeria, I know that this is the biggest part of the law. You now have a law that almost if you are in Nigeria, the law seems to be saying that if you are a citizen you are taxable in Nigeria. That's what the law seems to be saying. If you read the provisions, that is what the provisions are basically say in another way. So if you have a place of permanent abode in Nigeria, you are seen as a resident. If you have significant economic presence in Nigeria, you are seen as a resident. If you have family ties in Nigeria, you are seen as a resident. If you are in Nigeria for more than 183 days, you are seen as a resident. At times, somebody will ask you that, how are they going to see these people? How? But ask yourself, if a Nigerian go abroad, for instance, the first thing we do if we go abroad is to make money and come back home to invest. That is how we are. That is how we are structured as a people. As I live in Lagos now, I'm not from Lagos. But as I live in Lagos, now if I have money, one of the things that normally will happen to me is I need to build a house at home. That is how every Nigerian is wired. So if the law is saying that if you have such a thing in this place, oh, you are living in Canada, yes, very good. But you have a block of flats in Lagos that where they are paying rent to you, you are already what? A resident who is taxable in Nigeria. So almost all our people that are investing here and there in Nigeria, oh, they are doing Airbnb in Nigeria, they are doing this, they are doing that. The new law is saying that even though they live in the US or they live in the UK, they actually tax residents of Nigeria. So this is big for individuals. Now for expatriate also, in the past, the expatriate will say that, oh, you are taxable on worldwide income, but because resident was not defined, every organization will tend to define worldwide income from the point of view of worldwide employment income. But that's not what the law has said. The law has said now that if you are in Nigeria for more than 183 days, then you have become a resident. And how are resident taxed? Is a resident are taxed on worldwide income. So if you have an expatriate who work in your organization, it's no longer the matter of, oh, okay, this is how much we pay you. We have declared no. What again are you getting from your home? Because this is where you are living. You are resident here. So these things are big. And then for the regular employees, where the law has said 800,000 naira is exempted. But you know, it is ridiculous. 800,000 naira is actually 66,000 naira per month, which is not even up to the minimum wage. So in essence, the people the law has exempted from personal income tax, actually people we should classify as among the poorest of the poor in Nigeria. Because people earning 60,000, 66,000 naira a month, you can't be saying those people are wealthy people. They are very poor people. So those are the people the law has exempted. And if you are somebody who is also paying pension contribution and some of those other minor things, then if your income is in the region of 1 million naira, 1.2 million naira, you are not likely to pay more tax that you just get some little saving, maybe 3,000 naira better than what you were doing before. Because what the law has effectively done that make it the way it is the fact that the law remove consolidated relief. The law we have practiced up to this point has what is called consolidated relief, which was 20% of your gross income or 21% of your gross income if your income is higher than 20 million naira. So it simply means that all the while, what we pay tax in Nigeria on is actually on 79% of our income. So government said, okay, Zion, your income is 100%. Take 21% off it. Calculate your taxes on 79%. That is what has happened since 1959 when the law was passed. But this new law has taken away the consolidated relief. So when you take consolidated relief away, you just ask yourself, if your income is in the region of, for the sake of argument, let's say 5 million naira in a month, it means that previously you would have been 21% of 5 million would have been exempted completely from tax as consolidated relief. But now, the whole of the 5 million will be subject to tax. So the tax will become bigger for employees. So apart from people who are earning at maybe a lower level, 1 million, 1.1 million, 1.2 million, apart from those people, every other person in the region of 2.2 million and above will be paying more taxes. And as your income also become bigger, then the tax become massive. Yes, so that is for employees. And there is something that the law has now provided. You know, before now, everybody will say, well, my employer has filed my returns now. I don't need to file returns again. I don't need to file. I mean, Coronation Merchant Bank has filed returns. Now, the law specifically said now that employees must file their personal returns. And to make it critical, the law now has created penalties. So in the past, if you don't file your returns, unless the tax authority cash you and assess you, now they don't need to cash you, because the law now said that if you don't file at the end of the filing due date, which is 30th, 90 days in the new year, maybe 31st March, if you did not file from that month, your penalty is 100,000 naira. Then every other month that non-compliance exists, you pay 50,000 naira. So just imagine that you did not file your returns by 31st March of 2026 because nobody will see you. And in 2030, you need a tax clearance certificate from Lagos because now you have arrived a little, you want to register your properties. And they say, okay, you need a tax clearance certificate. And they say, okay, where is your returns? Where's you say you've not been filing? All they just need to do is to go back to 2026 and begin to count 50,000 naira per month for maybe 6 years, 7 years. And you just ask yourself, just look at what it will look like. So these are the major things that individuals now need to be conscious of. Employees now need to file their returns because the returns filed by the employer and the 31st of January are employers' returns. The law now said you must file your own. Now, so back to the high net worth individuals. My only encouragement is high net worth individuals should continue to pay their taxes, even though the law has not actually provided anything that can bring them into the net. Because ask yourself, why are HNIs not paying taxes before? It's not because the tax rate was low or because it was too high. Because there was no way to bring them into the tax base. And this law has actually not created anything that can bring them into the tax base, nothing. If you look at the amendment you have, the last amendment you have in South Africa Revenue Service, the government introduced the lifestyle audit in South Africa, and it has created miracles, lifestyle audits. So if I'm suddenly driving a Range Rover on the way now, the taxman can look at me and say, Zion is not driving a Range Rover. Okay, please check his tax filing, check what he filed last year. Zion filed 2 million naira as his annual income, but now the car he's driving is a Range Rover. So the taxman can now come and say, okay, well, Chief, thank you, congratulations. Your car is fine. I mean, let's know how much you buy this car. Where are the documents? Okay, so if you were able to buy this car, 500 million naira, then we're assuming that your income should be in the region of a billion. So this is the tax you were. So the lifestyle audit is doing so much work in South Africa. I mean, you have Nigeria where you go to a party and you see people spraying dollars. There's people spraying dollars. That man is spraying dollars now, don't even have a tax clearance certificate. He has not filed tax returns any day, but he's spraying dollars in the party. So the law has not done anything to capture these people. And until we capture these people, it will look like the reform in terms of individuals is actually focusing on people who are in employment and all over the world. I'm not sure employees are classified as wealthy people or high net worth individuals all over the world. People living in Banana Island and Ikoyi and the rest, they are mostly not employees. They are big boys and they are not employees. So those people, so I want the government to still look back at the reform again and find a way to go towards those people so that we can have a true tax reform that reflects when you earn more, you pay more. Thank you.
Thank you very much for that. And I think you've given relief to a lot of HNIs. They will be there dancing and happy again that, okay, it seems it's not yet our time. Let's keep flexing our money. Yeah, thank you very much for that, sir. So while we are on it, I think they will drop a poll on the screen now, please. We can start dropping our questions. And looking at the time, it seems we've spent a lot of minutes already. Yeah, so before I move to Dr. Sandra, I think I will ask my last question to Dr. Zion, right? Is still on individuals and this issue of capital gain tax, right? So a lot of people have been very scared in terms of investment, even down to foreign investors kind of feeling reluctant with this issue of capital gain tax that we always known to be, okay, 10% on your chargeable gain after considering your sales proceed and you less your any incidental cost. So you just pay 10% on CGT. But now with the amendment to the CGT saying, okay, it will now be based on the rate of whether it is personal income tax or company income tax in terms of 30% if it is, or personal income tax depending on your threshold of rate. So how do you think this capital gain tax will have impact on investment? And is there any investment that people can actually consider that they are not looking at before, which are exempted? Please, a minute or two, because of the time,
Yeah.
you please
Yeah,
help us to clarify this. Thank you,
So
sir.
thank you so much, because this has been this has caused a lot of discourse all over the place. But the good news is, I mean, we all know that what we call gain is actually the difference between the purchase price and the sales price. But the fear of everybody was, okay, now that you have amended the law to say if for corporate, CGT is 30%. For individuals, it is from 0 to 25%. So what is going to happen to me if I buy shares 5,000 naira in 2020 and I dispose them in 2028? Am I not going to now because of inflation and the rest, the price of the shares may have grown from 5,000 naira to maybe 20,000 naira. It's actually not a gain. It's just the effect of inflation in Nigeria. So that was the fear of everybody. But the committee has clarified that just like the law is taking effect from 1st of January, the reform that affect capital gains are actually effective from 1st of January, such that whatever gain that may have accrued on your stock, your shares up to 31st December will be locked out of effects of the new tax regime. So in essence, what the clarification they brought up was for the cost purpose, the cost base for shares, stock, and everything will be seen as 31st December. So if your shares, for example, you bought it 10,000 naira in 2024, and now by 31st December, it is now 50,000 naira. The cost for the purpose of capital gains from 1st of January 2026 will be seen as 50,000 naira as against the 20,000 naira that was in the past. So the past cost is locked from the effect of the tax reform. So that is the clarification. And I mean, it is in line with best practice. You are not going to say because you bought shares 20,000 naira 5 years ago, and that share is 200,000 naira per share this year. It's a gain. It's actually not a gain. This is the effect of inflation most of the time. So yeah, so that is the situation. So people don't need to get bothered about that. Their shares, their stock will be priced in terms of cost on the basis of the cost of those assets as of 31st December 2025, not previously.
Okay, thank you very much for that, sir. Thank you.
I want to add to that, Zion, we don't have the law yet, so that is just a comment. So I guess we need a law to back up that comment, because currently, yeah, based on the CGT from companies' perspective, the law talks about the cost of purchase. So in terms of what Zion has said, we have that comment from there, and it's online everywhere on social, but there's no backing yet. There's no law. It's not in the law. So hopefully maybe there will be a law before January 1st, but if not, it will just be a wish that this is how it will go until we get back. But it's very good that they're having that conversation in order not to scare investors away to put, but they need to make it good and get it signed up into law so that everybody can apply it. Thank you. Thank you, Zion.
Thank you very much for that clarity, ma. And at least with your divine power as our pastor, ma, we hope that will be the reality, right? Okay, so coming back to you, ma, is to help us in terms of corporate. We've been discussing about individual for a while. So what are the impact of these for a corporate organizations? What are they expected to do? And we also saw something on control foreign company. what is this CFC, what is it all about, and how should company prepare for this? Thank you very much.
All right, thank you so much. So many things to be done by companies, in terms of preparation. The first thing is to be aware, like what we are having now, right? Everyone here, you've taken the first step to be aware in terms of the provisions of the tax law. How does that affect you? How does that affect your business? What do you need to do in that respect? That is the starting point. And then the next one is to do a comprehensive assessment, impact assessment, looking at it. How does this impact your services, your products, your current structure? What model do you need to change? What product do you need to bring in now to take advantage of any tax provision that is in the law? Or what process do you need to terminate if it's going to result to you paying all the money to the government? So you need to look at that, a holistic view. There should be a comprehensive analysis and have impacts. How does this impact you as an organization, individual? And this should cut across all processes, including procurement, because there are a lot of provisions in the law. For example, in terms of there's a penalty if you onboard unregistered taxpayer. The law says you pay 5 million naira. So your current process, how is it being structured? Is it structured in a way that you make sure anybody coming in, they are registered, the tax identification is required. So comprehensive assessment is required for company to be able to know what do you need to change. And I know that process should have started, but a few days now that can be done. What do you need to change? What else can we do? Then the third thing will be to upgrade your system. There are some tax rules. So you need to upgrade your system, upgrade internal processes, especially tax process and function optimization. And what do I mean by that? The process you need to comply, that you follow to comply. For example, for you to comply with respect to CIT, you start off with your tax computation coming from the financial statement and process. Then you go through finalizing review, either with your consultant and making payments. So you need to walk through other processes and look at it based on what is happening and based on the new law. What do you need to change? Especially now that the computation, you're required to include effective tax rate. So there's already something that you need to change in terms of the process. And there are a lot of huge penalties if you don't comply. So you want to make sure that everything, the document and all that is correct and is right for you to take on to implement. So changes, upgrading your processes, software, and then continue to train. Training of your people is very important. Then with respect to the question on the control foreign company. Control foreign company rules, is a provision aimed at preventing, tax avoidance rule with respect to just to make company to stop setting up share companies in tax havens. So, for example, your companies are that at the end of the year, you just put up a subsidiary there, nothing is happening there, and then everything is being controlled from where you are. So the law put it that in any year, if there's any foreign subsidiary that is controlled by Nigeria, if at the end of the year that subsidiary did not distribute profit, and then the profits will not be detrimental to the business of the subsidiary, the law empowers the tax authority in Nigeria to deem that profit distributed. So it also applies across jurisdiction. This is also this was Action 3 of the OECD BEPS. This was their recommendation based on their conclusion 2015. So a lot of countries have already introduced this. We are introducing it now, is to actually avoid profit shifting. So the rules are to ensure that profit earned by foreign subsidiary for Nigeria businesses are brought in and taxed in Nigeria, so that you don't just take Nigeria, you don't take our money out, you set up that company there, is helping the economy of that country, and nothing is coming back to Nigeria. So if you don't distribute, the tax authority will deem the profit distributed. And then another thing you need to know, that the definition of dividend also include this profit where is deemed distributed by tax authority, this deemed dividend, and all the taxes applicable to dividend we apply, i.e. withholding tax and other taxes that in terms of excess dividend tax that could apply. So it's to allow company, to comply and avoid profit shifting. That is the CS rules that apply across companies. Thank you. Yeah.
Thank you very much for that, ma. I think you don't justice the questions with while still managing the time. Okay, I think we have quite some number of questions from the audience, which we go straight to. There's a question from Chinonso Onumara. He said, there are multiple taxes and levies that Nigerians are subjected to currently. Take Lagos for an example. We have market levies, matching ground, various Omonile levies. When you want to build a house, the various daily levies collected from markets, men and women, from transporters. So what will become of these various taxes? How do you want to impose these new ones without addressing those ones? Thank you. I don't know who wants to take that. Dr.
Okay,
Sandra.
I can take it, and then Zion, you can. Actually, they didn't introduce any new tax, right? So based on the reform, we are not seeing, there's no new tax that is being introduced now. It's more like simplifying the one we have. Like we have companies income tax before. It's still what we have. We have personal income tax. We have value added tax. We have withholding. What they are trying to do is to streamline it. And where is multiplicity coming from? It's coming from our constitution, because various states have the power to enact and law, and that is what they are currently working on. The bill before the National Assembly to amend the constitution has just passed the second reading to mitigate against in that respect. So let's be hopeful that will be implemented, because to streamline the power of various government in terms of enacting taxes that will be subject. But if you also look at it, you can see some of the things that have been streamlined. If you pick up, you can see small companies being exempt, 100 million based on NTAA, and NTA 50 million, depending on what they will issue. Definitely NTAA will go with 100 million, small company being exempt. So a lot of things in terms of looking at our sector that should happen in that respect. So we'll see, based on implementation and there's certain exemption that could apply, that we hope to see reduction in that respect if that applied. And then the progressive tax system with respect to having a low income tax earners being exempt, being achieved, and not being high, having more progressive tax system and all that. Yeah. So yeah, good, a lot of things, but I think we are moving better. We are on the right direction to address everything, that are not working well with our tax systems. The first, as a baby, the first thing is to take the first step, right? So that's what we've taken, putting the laws in place. Other things are going to follow. And then they've also set up committee for implementation. So hopefully we'll get there in terms of reducing the multiplicity of taxes that could apply in that respect.
Okay.
Thank you.
Thank you very much for that answer, Ma. We have quite a number of questions, but I don't think we can be able to answer all of the questions on this call. But the questions are noted, and the responses will be provided via your emails that you register with.
Sorry, Jamie, let me just make a comment there, right?
Okay, please go ahead. You are muted.
Hello, Jamie?
We can hear you now. Please go ahead. Okay. While we wait for his network to be back, let me
Can you
go.
hear me? Can you hear me?
Yes, we can hear
Jami?
you. We can hear you now.
Okay, let me
Please go
just
ahead.
quickly make a comment there. Thanks, Dr. Sandra. So I think the question is actually pointing, there's a kind of confusion that we actually really need to clear here when we say that there's harmonization of taxes. So this person is trying to see if we say the taxes are harmonized, are there other still sub taxes here and there, whether formal or informal? I think that's the question. I read somewhere yesterday where the Joint Tax Board, as it were, said all of these stickers that you collect in interstate that you put on vehicles, all of those things need to be. This person is actually really speaking to. So probably the person was expecting to say, okay, what has the government put in place to talk about, harmonizing all of this? You have this. You used to have the JTB, right? The Joint Tax Board. Now you have different states coming together to ensure that there is no duplication of taxes. You the state, they impound your car and say you have to collect their state tax and all of that. Maybe I think that's what the person is trying to speak to.
Yeah, so maybe I just put a little comment on this too. So yes, it's a big concern to even the government, the challenge of multiplicity of taxes. Because when you actually talk about multiplicity of taxes in Nigeria, people are not talking about the federal taxes, maybe corporate income taxes, personal income. That's not what they are talking about. If you go down to the states, you will be afraid. Just a month ago, I supported a client in one of the states in the Southeast, and there was education levy, which is education levy. I think it's 5% of a payroll. There's education levy, a whole lot of almost all the levies that are put together to get development levy now. They now have them at the state as passed by the House of Assembly. So, and I even told myself that when we start implementing this law from 1st of January, I will also write to the committee to ask the committee that, yes, one of the things you showed was that we are trying to throw away multiplicity of taxes. These ones that are at the state level, who is going to deal with this? I saw the meeting Irene mentioned now, the Joint Revenue Board met and they said all the other taxes had been abolished, and I was laughing. The people are sitting in this committee, FRS chairman and State Internal Revenue chairman. The laws they are implementing are passed by state governments. So the people sitting in those committees does not have the capacity to sit down and say, we have thrown away all this, because those taxes will still be collected. I can tell you that Lagos seems to be far away from other states in terms of how many other levies they are collecting. Lagos is very good in that area. They're actually not bothering people much about levies. If you have had operations in places like Delta State, Rivers State, Akwa Ibom, Imo, and all those places, then Kano and some part of the north, you will be shocked. Recently, in one of the South states, my client even went to court. We went to court to say, no, you cannot introduce this levy you have introduced now. We went to court. And do you know that the Federal High Court, in fact, we told the client not to pay because the state does not have the power to introduce these laws, these new rates. And the Federal High Court that sits in the state said the state has the power to impose anything they want to impose to make revenue for the states. And so the client lost the case. A day after the client lost the case, the revenue went there and sealed up the premises of the company. We went there to have meetings with the Attorney General, and the client was forced to pay more than 100 million in terms of levies. You cannot even identify what they relate to. If you go to Kwara State, you have water levy. The company has to pay water levy. So many things. So they are there. So what I will see appeal to all of us is, now that we are saying the laws are being reformed, it will be important to also...
Zion's lines.
Oh, can you hear me?
Sorry, Jami, can you hear me? It seems, is it my network or Zion's line?
It's okay. Maybe it's from your hand, Dr. Sandra. You can hear him very well.
So it will be important to also maybe do some advocacy to governments. Because these are things that we need to, why we want to look at best practices, look at the other laws properly and increase tax generation. We should not allow this ones are nuisance to come into the schools. You go to a state and they say there's education levy in a state. There's a water levy in a state. In fact, some state has infrastructure levy that companies need to pay. Levies that are passed by the State's House of Assembly. They are there. The consolidation of the laws that we have at the federal level now has not affected those things. Those things are still there. So it will be important to still carry the advocacy forward so that we have a society where people see us as serious people.
Yeah, okay, so that I think that was why I mentioned with respect to our issue is not just addressing it. It had to be amendment of the Constitution because of the power that the state, the local government, they will continue to enact that law or except the Constitution is amended. And then there's a bill before the National Assembly, and that bill has passed second reading with respect to streamlining the obligation, the power for federal, for state and local government, the task scope in that respect, the issue. But just putting it in the tax law will not without amending the Constitution, because the power is another to enact those taxes that are being put in place until that is being our Constitution is being, and a step has been taken. It has passed second.
Okay. Thank you very much, Dr. Zion and Dr. Sandra. I think because of time, we'll just be able to take one more questions and the others will be attended to, like I said. So from Taiwo Badero, he said, with the new tax effective January 2026, with the 10% withholding levied on investments such as treasury bills, commercial papers, etc., be annulled for individual investors in place of pay tax, or will it still exist as a second layer of tax? Thank you. I don't know if Dr. Zion would like to take that.
Sorry, I did not hear. Your line was breaking.
You're muted, Dr. Zion.
Yes, I can't even. I didn't hear you.
Yes.
Is this? Can I type it on the screen?
Did you? Zion, did you get the question? I didn't get. Is it my network?
Can you hear me now?
Yes, I can hear you now.
Let me repeat the question. So from Taiwo Badero, he said, with the new tax effective January 2026, with the 10% withholding levied on investments such as treasury bills, commercial papers, etc., be annulled for individual investors in place of payee tax, or will it still exist as a second layer of tax?
It's a separate tax. Is on interest. And for interest income, for individual, it's final tax now, Zion, for individual, but for corporate, it's not final tax. But for you, it applies. So 10% will apply and is a final tax for you as individual. But for company, it's not a final tax in that respect. So it will apply. It doesn't, pay is different. Pay is on your salary. This one
so your
is
income.
on your passive income. Or your investment passive is passive. You are not doing anything. Your money is working for you, but your salary, you work for it. It's subject to tax, so it's separate. It's not addition or suppression.
Sure.
Thank you.
Thank you very much for the clarity. I think due to time, we might not be able to answer any question more. Okay, I think we can still be able to take one more. We have a question from YouTube. Those that are watching us live on YouTube. So someone said, do I need to file for tax if my employer is filing my tax? I think Dr. Zion mentioned something like that, making it compulsory for individuals to also be filing tax. So in this new regime, all of us will be a tax consultant. Yeah, so I don't know if you still want to just add a little more to that, sir.
Yeah, so the returns that the employer file, actually not the individual's returns. What has happened all the years is Nigerians were not filing their returns. because that return that the company filed on 31st January is actually called Employer's Declaration and Certificate. So did it say anything about the employees? It's Employer's Declaration and Certificate. So, but what the new law, and our government was aware that individuals were thinking that after all, the company has filed, why would I bother again? But ask yourself, we have employees who has properties. Are you not saying that if the employer filed the salary they pay to you, what of your properties, are they exempted from tax? So you were supposed to be filing. So, and the law said file. But the old law did not provide penalties. You know, anytime there's no penalty, even when we're going to school, they don't flog you for coming late. Next time you come late again. So what the new law has done is to state it clearly in the law that every employee needs to file his personal income tax return. So it is stated black and white in the law. Then a penalty is now also included. If you fail to file that return by 31st March, 100,000 naira penalty is applicable for not filing on 31st March. Then every other month that the non-compliance persists, you pay 50,000. So if it is 20 years you did not file, the day you finally come to look for tax clearance certificate or you are caught, or last month cash your car on the way and say, where is your TCC before we release the car? You say, no, I've not been filing. Let me rush to go and fight. They will see there that, okay, 50,000 naira per month plus the first month. So it's critical. You don't need to, the employer's filing is for the employer. The individual needs to file his personal returns.
Okay, thank you very much. I think we really need to implement this lifestyle tax. It's not be just the employees that have income that are feeling the heat. Okay, I think one last question before we have a closing remark, and it's from anonymous attendee. So thank you to the team for the presentation. He said, Dr. Zion had noted that HNIs may seem not to be the main focus on tax paying. However, Dr. Chandra has said that the HNI who use tax avoidance as their approach by capitalizing on the loopholes are now being put on the spotlight by the government in ensuring that their earnings worldwide are now going to be focused on. Can Dr. Zion please clarify what it means by the HNIs not being focused on, please? That the advocacy to include the government giving back aggressive social amenities. Thank you.
So the point, when you look at HNI, so that is why I said that if you read the law properly, the law just followed the pattern of the laws from 1959. The Nigerian law has always been drafted to focus on people that you can see and cash immediately. And who are those people? Employees. So that is why you see that companies are audited left and right by the various state tax authorities because they are chasing taxes from employees. Now, how many people are employees in the society? How many people? Just like I mentioned earlier on, most of the people that are driving all the big cars you see in Lekki and all over the place, they are not employees. And go and find out. If you find out, if you see what they pay as tax, you will even be crying you that is not earning so much. Because your tax, which you pay in a month, some of them is their annual tax. Now, if you look at the law, the government has said, what is critical in the law is that government has said, this is what resident is defined as this. And the law has also said, tax rate has moved from this to this. And we know that based on arrangement that's a now global arrangement, the government can actually write to tax authorities in other jurisdictions, and information about you will be provided. All these things we are talking now, they are long stories. The new law has also said that, the bank on a quarterly basis will provide reports to the government that shows the transaction of an individual that has transaction of more than 25 million in a month in his account. All these things we are talking now, they are good on paper. Easy on paper. But these things that I just mentioned now, I can't see how, from the experience I've had with people locally, other people, I don't see how these things can help an HNI who is not filing returns to now begin to file returns because government has said the tax rate has changed. No, it won't change. Look again. Look at the big markets you have in Lagos. Look at Balogun Market, look at Ladipo Market, look at all the big places, go to Onitsha Market, all these big places you see. There are people that their businesses are in billions. What do they pay as tax? Because of the difficulty in getting them to pay the right taxes, all government simply do is to classify them maybe as high net worth, as informal sector, and say, okay, well, the people that are selling cement, your tax per year is 10 million naira. The people that are selling drink, your own is this. The people that are living in Ikorodu, this is how much you will be paying. That is what government has done. So it's a quick fix of a proverb of instead of if you are pursuing an antelope, instead of the whole antelope jumping away, just use your cutlass to cut its tail and hold her back. That is the approach. What the law has said is the people in the informal sector who are basically not employees will be subject to presumptive taxes. The presumptive taxes has been in the system. The tax authority has, in the old law, says that if the tax authority cannot determine your income, they give you a best of judgment assessment. So you just change the nomenclature. You now call it presumptive tax now. In the past, you call it best of judgment assessment. So there's nothing in the law that you can say that with this, HNI should be shaking. No, there's nothing. Nothing at all. So like I mentioned to you, now, if you look at South Africa, there is lifestyle audit. Lifestyle audit is also in so many parts of Europe. It's there. Because even if we have laws that say this penalty, if you don't file it on, this is a penalty, you first of all need to see the person. And if the man who is driving a cyber truck, what millions of naira, come to the tax office, maybe in the States, and pay, say, okay, what is your tax? They say, well, we are just struggling in this country. Say, okay, we assess you to 200,000 naira per month. Say, okay, this is too big. You reduce it for him, and he pays tax. The man is not paying the tax that is commensurate with his wealth. That is the point. So there is nothing you can see. If we introduce lifestyle audit in Nigeria, if government will have the willpower to do it, because the willpower is the key issue, are you going to be able to throw the people who maybe support your election, support your candidacy into that bracket? In some of the states that I've dealt with in the South before, I went to the states and they told me that informal sector are exempted from taxes by the governor. And I was wondering, I said, did the governor understand what is called informal sector? Governor, you mean governor is these informal sectors are not taxed in this state, they are exempted. I mean, a whole lot of the states in South, they exempted the people they call informal sector. And the informal sector are some of these people we are talking about now. So, yes, nothing concrete is on the law that can actually drag them into the net. But for you and I who are employees, I mean, EY, we have to deduct whatever needs to be deducted from my salary before they pay the balance to me. So you can see that they can hold me. But those people that we are calling HNI now, who are not in employment, who have not also come to declare their income voluntarily, because we are relying on them to say, okay, I declare voluntarily. They don't declare voluntarily. What is there in the law that can force them into declaring what they should actually pay? So that is why I said the HNIs will still be aloof with the new law. But it's a step. Sandra has mentioned that it's a step. It's a step now. Now that we have taken this step, maybe next time, if a lot of advocacy, we are writing to government, publishing in papers that this is what they are doing in other places. This is what they are doing in South Africa that is bringing their tax up. This is what they are doing in Tunisia and Mauritius that is bringing their tax up. Why are we not doing that? Maybe as we begin to do that, you will see that another time we see a reform, maybe something like that will happen. I mean, after all, Dangote stood up and said somebody put his children in an elite school and he's a civil servant. And we are told now that the person has finally on his own resigned that, okay, go and investigate, but let me step down. It never used to be like that. I mean, in the past, you can even go to court to challenge him that the money I used was my father's money that he gave to me. Who gave you the amount to say that? So advocacy will be key. We can write, we should complain to governments. I mean, if we do that, maybe they will hear what we are saying and they do what is needful. I mean, we want taxes to be collected so that our country can be in the path of progress. Yeah, thank you so much, guys.
That's a wonderful response to that. Thank you very much. Thank you, Dr. Zion. Thank you, Dr. Sandra. Please never forget to fill the poll that is appearing on our screen. Thank you very much. I think we've done justice to it. It's left to me. I would have loved us to continue, but there's still a lot of things to learn, to be aware of. But at least one thing is certain: we keep learning and we keep getting informed. So I'll hand over to the bank CFO to give us the closing remark. Thank you very much. Over to you, Awini. Thank you.
Okay, Jamiu, thanks a lot. Yeah, trying to bring up my video. Okay, thank you so much. For me, I didn't expect less. I said it from the get-go. Bringing two eggheads in one platform is like shaking the platform. So this is to say a very big thank you to my good friend and brother, Dr. Zion, my wonderful sister, friend, colleague, Pastor Mrs. Dr. Sandra Moma. Thank you so much for taking us through this since over an hour and a half now. Yeah, thank you. And I think our listeners and our watchers, our viewers, I mean, they are very educated now as far as, I mean, and you have also allayed some fears. For me, I just want to make one or two remarks. First is just like Dr. Zion said, and even Dr. Sandra, we would expect to be seeing a couple of amendment to this as we progress, maybe through the Finance Act, because like she mentioned, yeah, I mean, let's start. There'll be some teething problems that we think will be addressed through some Finance Acts, I mean, on an annual basis, since that has come to stay. The second one, what I got from here, and the question we should also be asking ourselves is, we complain about the retrogressiveness of our tax system. We expect it to be progressive. So the question is, with this new tax act, is it progressive? From what we've heard from Dr. Zion, we are yet to get there. But I hope what the example Dr. Zion gave about the South Africa will not be our case. I imagine if I'm driving and somebody else needs to stop, park by the side, show your tax clearance and all of that, it will be so chaotic. We have over 200 million people in Nigeria. It's not like South Africa. We will, I mean, that should not take us back to the Stone Age where our father told us that in the marketplace, the tax man can just raid the market and everybody wants to see the tax man coming from the east, you run to the west. I will expect some digital solution to this. Just like the VIO, we just check your maybe from your plate number, they see your detail and all of that. And one last one for me is for all of us here, especially the HR, I hope we have started interrogating our payee formats. Yeah, because this will come effective January 2026. We need to look at tax payee format for all of us. And if we have not done that, it is our responsibility as employee to urge our HR to do that, make the tax consultants, so that as soon as we hit 1st of January, whether you are paying people upfront or what have you, you are already applying the new tax law so that you are not caught unaware. We are very grateful to have you. Again, we are Coronation. We are a one-stop financial supermarket. We have Coronation Merchant Bank for the banking. We have Coronation Insurance, Life and General Insurance, Coronation Assets Management. We have Coronation Registrar. We have Coronation Security. We have Fiducia. We have Trump. Whatever your financial need is, you will always get a Coronation entity to attend to you. On this note, I say a wonderful thank you to the organizers of the program. A wonderful thank you for all of you. We have about 500 attendees. We say thank you to all the attendees. Thank you to all of us. Thank you, Jamiu. Thank you, Omolade, to the MNC team. Thank you to the technical team. Thank you, and I wish you compliment of the season and a prosperous new year as we wind up 2025. Thank you so much. Have a nice one. Bye.
Bye.
Thank you very much. And please, you can get the recording on YouTube at Coronation Group. Thank you very much. You can also contact us at crc@coronationmb.com. Thank you very much. Thank you, everyone, for joining.